Start off with Bitcoin here, and again, it really is important to maintain that perspective. We are fortunate to be in a time where Bitcoin is still relatively cheap. Not as cheap as it was last bear market, going down to 3,200 and then down to $4,000 during March 2020. But you need to have that understanding, and then once you start understanding Bitcoin a little bit more, I promise you, your next bull run, you'll be less and less interested in altcoins, and you'll pretty much just use altcoins to be able to get more Bitcoin. I promise you. The more you understand Bitcoin, the less you're going to think generational wealth and all that stuff for your altcoins. I totally promise. Okay. I guess I'm on the bottom left here. Kind of like it on the bottom left. All right. Looking at this, Bitcoin went down almost exactly. I was guessing Bitcoin was going to go as far as the last wick here. So the second or the so one drive. So May last year, one drive, two drives, three. I thought it was going to go maybe as low as 28.6, which was the third drive down about a year ago. Actually, almost exactly 11 months ago in June. However, it went almost exactly horizontal to the coronavirus dump, taking Bitcoin from roughly 58K all the way down to 29 and change. So the high 29s, roughly 29.7. And if I draw a straight line here, so if you want to draw a straight line, something that a couple of my Discord community members always get onto me about, just hold shift, make it straight, stop fumbling around with it. All right, there, got your straight line, and it almost perfectly hit that wick. Right there, you see that? The very first wick. And then that also happens to align with, Maybe I should have extended that line a little bit, but let's go like this. And it also hits roughly, not exactly, but roughly these two wicks down here. And in large moves, let me put myself big. In large moves, when you're looking at horizontals, a lot of times a bunch of candle bodies aligning on the same exact horizontal plane, mixed with sometimes wicks going up to that level as well, that creates a horizontal of support, right? Or even a horizontal of resistance, or if it's overhead. For whatever reason, wicks that have violent behavior around it, or in other words, what I usually say is when price turns on a dime, essentially, it wicks down and does a V-shape type of deal. Even if that V-shape doesn't hold up, it comes straight back down and does it again. But as long as there's V-shape types of wicks, for whatever reason, it holds as much weight as a horizontal with 10, let's say 10 daily candles, all in a line. It holds a ton of weight, and that's the same on altcoins as well. So a lot of altcoins, let's see, 2018 altcoins that started off, their graph would start way up high, and it would come down, and it would V-shape and come up and make some type of lower high. And then 2 years later, once it finally bottomed out, a lot of those graphs would come up and use that V-shaped wick as hard resistance. So I'll do this on my chart. And so remember this for the next bull market. Like this could apply to Ethereum or Cardano or whatever the case. So 2018 coins fell, had a little rally, boom, lower high, boom, and then 2 years later, 2 years later, bam, starts recovering, and then you make this horizontal here, like that. And almost all altcoins from 2018, they did something like this, bam, and they had trouble getting over it, something to that effect. So even though it was only a wick here, and that you didn't have very many candle bodies aligning perfectly with that, for whatever reason, when it turns on a dime, price has a hard time getting above that, or once it does get above, it does use that as strong support as well. It's equally strong as support as it is resistance. So I just said it's equally strong support, right? Therefore, that's why in my YouTube video from yesterday that wasn't live, I mentioned super specifically the second most probable scenario, which is just behind the most probable scenario of crashing through this. Second most probable is it does get some type of relief bounce, maybe even up to 38 or 41K here. A second most likely situation because of specifically, and I didn't describe why, because this is a horizontal created by very, very violent wicks. And that is one of the main reasons why I don't think I'm going to make it my top most likely yet, but it is bouncing exactly on that type of line, right? And this line is a tiny bit lower than the line I was looking at yesterday. Technically, I was looking at this line, right? I'm not even using the same BTC chart right here. I was looking at this line here yesterday, but I just made the macro range like this because the wicks I have as going below, right? As I covered in some YouTube videos, whenever it interacts with this bottom line, it typically wicks below it. All right, that's what we got for very, very short-term price action holistically. This could end up being used as support, potentially. But if it gets trapped under it, it's going to be a rough time. So what we can do here is, instead of using the line from which it bounced, and so I'm getting ready to show you how I would interpret if I'm doing short-term time frame trading, or I just want to know in any moment what is Bitcoin most likely to do over the next 4 hours or 8 hours, or maybe even a shelf life of this, maybe 24 hours. So the shelf life of what I'm about to show you might only last about 8 hours. So, for example, if you check to see if a baby's asleep, that checking, the action of checking, the shelf life of that only lasts about 2 hours, right? Or an hour and a half, because babies wake up, like small newborn babies wake up a lot, right? For all of those of you without kids, just trust me, like it, small babies wake up a lot. So the shelf life of checking doesn't last a whole lot of time, right? So the shelf life of this checking on Bitcoin, which I'm about to show you, the shelf life of that, I would say is probably going to be 8 hours or so. So I'm going to show you a short-term time frame trick, so you don't have to be staring at the charts all the dang time. This is going to work for you with a high probability of success rate. I would do something to the effect of maybe the 1 hour chart. So I'm up. Here, can you see what I'm clicking over here? Let me drag this down just a little bit right there. Yeah. I'm up here, gonna mess around with the time frames. I would be on the 1 hour, maybe down to the 5 minute chart, something to that effect. I kind of like the 5 minute chart when I'm dealing with this stuff though, because you can see everything you could see down here with price interacting with this line at exactly 31.2. So 31,200 is the bottom of my macro channel, non-tilted macro channel. All right. So as you see, as I covered yesterday, whenever you go below a horizontal and then you come back above the horizontal, that means you overshot the support and you found support just under it, which means you're statistically more likely to make a lower high. Right? Remember that yesterday? And there are very few exceptions. For example, July 21st, this same line, it did go below it and then took off. However, we knew that was just a trap, right? Because it just smelled like a trap. It was the whales made it too obvious. However, this is not a trap setup. And I'm not going to go over all the scenarios for that, why I can conclude that essentially with confidence. But it overshot the support. Therefore, you know it's likely going to be a lower high. Lower than maybe this high or this high up here. Like little local blips. Came back down, overshot the support again. This is the support, made yet another lower high. Overshot the support. It doesn't matter if this is a high or low. It did not use this as support. Therefore, statistically likely to be yet another lower high. Made a lower low, came up, used this as resistance. So essentially, this right here is called a failure. It closed on the 5 minute chart. It closed a candle above that red line at 31.2, and then it rolled on over. That's called a failure as opposed to a rejection. On the 1 hour chart, it technically got rejected though. So on the 1 hour, so if you look at charts, this actually was rejected, and then finally broke through, right? But on the 5 minute chart, it failed it. So the terminology is a little bit different depending on the chart, all right? Now, this is where I'm going with this. After this, so then it created an inverse shape, and then a bunch of retail pattern traders bought this up, right? And so that's all this is. This whole pump right here so this is why I keep telling you over and over, the easiest way to trade is to figure out where most people are going to be trading. That's literally all you try to do, right? So on micro time frames, you do have a lot of pattern traders who use pretty heavy leverage, and a lot of non-pattern people who simply just see that and it's their horizontal, and they're going to trade with the pattern traders. So you had a lot of non-pattern traders trading who are doing day trading on Bitcoin, who are trading with the pattern traders after they saw it break down and then make a baby higher low within the breakout, right here, that baby higher low right there. That's where a lot of people have probably added on. That's all that is. That's what that pump is. Okay? It's all because people see in the shape. They all traded it, they traded together, and it's a self-fulfilling prophecy. But it doesn't matter if their analysis is right or wrong. It doesn't matter. They are right because most people were trading on that side, at least on this micro time frame. Here's the trick, though. In essence, price, the 31.2 is the battle line. Okay, 31.2 is the battle line right now. Like, it's on the small time frames. So here's the trick that so you don't have to stare at charts all the dang time, at least particular to Bitcoin and how Bitcoin affects the whole market. If Bitcoin can continue to use 31.2 as support, all right, you're not going to have any, very likely, with a high level of confidence, but not guaranteed, you're likely not going to have any aggressive move to the downside for a shelf life, I would say, of roughly 8 hours. And here's why. Because as it's using it as support, maybe even making lower highs, all that stuff, it will come down below it and overshoot it and then make a lower high first, and then maybe even make a lower high, but maybe not, and then come up, use it as resistance, and then go like this and then tank. All right? So it's not just going to come here and go blue. No, it'll do like the inverse of this stuff, or this on reverse. Am I making sense there? Because there are going to be too many people defending this line as buyers, and it's not like they just go away, those defenders. So imagine these are the defenders of that line who are buying this up for longs. They're not going to go away on the first try, right? From a psychological standpoint, understanding why people hit buy and sell. That's why this has a roughly 8-hour shelf life, because it's mostly short-term time frame people who are doing this, so you don't have a long shelf life. But those people who are trading Bitcoin on this are looking at this horizontal because it's the neckline of this shape. So the same people who bought this up, they're not going to go away. They're going to try it a few times, right? And some of them will straggle, and stay, maybe keep trying it a little bit too long. You probably shouldn't try trading the same line more than 3 times ever. So if you have a resistance and you see, price come up to it and you short it, doing the same exact line 3 times within a short time frame is probably not the brightest idea. But however, and then we take a line like this, and so from current price to here, oh, look at that. No way. All right, well, I got lucky there. Can you see this on my chart? Can you see what time it says on the here? Look right there. See where I got kind of lucky there. We're gonna have to do this 2 videos in a row. That was lucky. All right. Well, that was definitely unplanned. Similar to my unplanned cool event yesterday. But 7 hours and 55 minutes from that 5-minute candle to exactly right here before it tanks. I was saying 8 hours shelf life. That was kind of cool. All right. I got lucky how I drew that. And so that's roughly how it would be, and why you would have it could only be 4 hours, but again, as long as you see price over this, you don't have to be you don't have to have the flight or fright or flight reaction or amygdala response, or whatever, however you say that stuff in your area, your microculture or culture. So even this, you shouldn't be scared about it just tanking. It's simply not going to happen without, it's statistically highly unlikely for these people having bought over here, or even new people. They're going to defend this line. It's not just going to go straight down. Could it come all the way down, maybe as low as here on the first pass? These wicks here? Yeah, maybe. I could see that happening. But I don't think it's in any imminent danger of just capitulating on short-term time frames. Are we in danger of capitulating on a daily aspect and weekly aspect? Absolutely. Imminent danger. However, imminent on a weekly scale is a week, right? This week and next week. So I would suspect that it would not overshoot on this first pass here. I don't think it'll, wherever it turns around, it'll be at this line or before. That would be my guess. Hopefully, Bitcoin price does not make me a liar live stream. But I mean, sometimes it can. Bitcoin can do weird stuff, but that would be my very, very confident guess. All right. I'm going to do some questions here in just a second. Now I'm going to zoom out a little bit and I want to show you something. It's in addition to my video yesterday where I showed you the two cross pads, we revisited that, and then I covered where my targets are for the downside using different EMAs because it's just how Bitcoin moves. It's simply how Bitcoin moves. I wanted to show you one more thing, and I'm starting to see this line. I'm not claiming anybody's copying off of me, but I'm starting to see this line a little bit more across YouTube, Twitter here. Obviously not the same exact way I drew it, but and let's see here, because I fumbled around with this line for years. And I'm confident that very few humans on Earth have messed around with what I call, personally, a master origin line to make it as perfectly calibrated as possible as I have. Very, very few people on this Earth have done that, specifically with this straight line in Bitcoin going out. So let's zoom out so you can see what I'm talking about. A lot of people do a shade fill under this line, like they make it like a triangle. So this is all black, and they show like weekly candles bouncing on it, right? On Twitter, but it's the most important single straight line in all of Bitcoin history. There is no argument for that, or there's no valid argument. You can argue all you want, but you'll be wrong. So look, just there. Yeah, I'm on the 2-day chart. So take a look. 2013 top, 2014, 2015 bear market, capitulate, boom, hits the top of that trading channel around the master origin line. Lower high, boom, hits the bottom blue line, comes up, just a parabolic move, boom, hits the top of that line of support. So never closed a weekly candle below this line. And if you throw on the weekly 10 EMA, the weekly 10 EMA did scoop just below that origin line. So let's zoom in there so you can see this. We're going to stack a couple elements on here in terms of are we capitulating or not. The weekly 10 is the red. We can even take off price. It doesn't matter. The weekly 10 is the red. It did cross the master origin line. However, what did price do immediately? It immediately got back above the master origin line as the red crossed that white line right there. See that? It had already made a higher low structure and just zoomed up. Okay? Therefore, and note that Bitcoin was way higher above this origin line than it in the last two cycles than it did get this cycle. So when it capitulated, it came down to that top channel, the trading channel. So the blue lines are the trading channel around here because that's where Bitcoin likes to trade as it gets to the most important line in its history. It capitulated to the origin line essentially, right? In the first two bull cycles. So the next bull cycle went to 20K. So this is all 2016, 2017, just a nasty run, right? The hardest part about this run is that it was aggressive the whole time with very few exceptions. So you had like a couple weeks at a time where it'd go bam, bam, a very aggressive move to the downside, but then it just took off. It was very, very hard. It was really hard to, unless you were buying after mid-September. You could have bought at almost any moment and just have been doubled your money with altcoins at any day. It was crazy. Anyway, so 2017, 20K top. And that's why a lot of people thought they were geniuses right here, including myself. And then I just got destroyed during all this. And then I started getting better at trading during this time. And I started being like profitable / break even around here. And then around this time, especially after coronavirus, I did very well with my buy orders, and then I started getting really groovy there. Okay, but it capitulated down to the master origin line. So let's go to that point right there. These are 2-day candles. Is this a coincidence? No, it's not. It's not a coincidence, I promise, right? And again, I'm going to take off price. Red crossed barely below the master origin line, and as that happened, what was price doing? It was already making higher lows and recovering and getting above the master origin line, right? But that's 2 times. However, the next 2 events around the master origin line are completely different so far. March 2020, or the coronavirus dump or whatever, Bitcoin had not yet capitulated from this massive run. Even though this wasn't a full bull market, this was like a third of a, that's why I think we might be in waves. This is wave 1, and what we just saw was wave 2 up to 64K, essentially. I'm kind of thinking that might be the case, but you can't confirm, we won't be able to confirm that until like 2024 or 2026 or something like that. But you can see here, it did not capitulate. No capitulation, no capitulation. Came down to the master origin line before a capitulation. And then, as in my video yesterday, red got close. So purple was down here, the weekly 89. No, it's still the 89. Perfect. All right, bam. However, I don't want to incorporate this purple here today, but red got close to purple, which essentially seals the deal that you will capitulate, right? When red gets close to purple, those are the weekly 10, weekly 89. As of now, it's a 100% hit rate, so it's safer to assume that it will continue that pattern, which as of now it has. And then it capitulated at the master origin line as this red was crossing here. So look, red crossed the master origin line. That's when it capitulated, as opposed to the previous 2 times. That's when it was recovering. As the red, or the weekly 10, crossed the master origin line, that's when price was recovering last couple times. Not now. The last time, that's when it capitulated. All right, now let's look at current price. So I didn't do this type of analysis last time because I was using just simple EMAs, but now I'm using an EMA crossing with the most important line. It does. So this is still an important cross. Bitcoin let's take price off. The red line crossed here, right there, and Bitcoin tried to get back up above the master origin line. It did, but what specifically did I say the last 2 times? That's when Bitcoin was getting above, and actually, maybe I didn't say this specifically. I meant to say this. In my mind, I said it. Bitcoin didn't just get above, but it used the master origin line as support. I actually, now that I think I phrased it that way. It used it as support the last 2 times. So let's look at what it did this time. And why this gives extra confidence that we're probably capitulating. That's why a bounce scenario is my number 2, and just blowing through it on a weekly basis, not on the 5-minute basis, but on a weekly basis, why we're going to probably blow through it. The 32-1 line and just keep going straight down. So when it came up, did it use that line of support? No. So essentially, this is one big failure that got above the master origin line. Forget about the red line. So this white line here, it got above it and never tried using that support. So that's just one big failure. And what sealed the deal for me, in my mind, that we are capitulating was that local high right there. It had to get back above this origin line on this attempt right here on April 21st and use this as support and then make this red line curl back in a positive slope that way. That was its last chance. And when that day came back below, April 21st, when that day, so this is actually the 2-day chart, but whatever. Let's actually go to the daily chart. Yes. This day right here, so actually no, it got above, failed it. Yeah, this one right here, this rejection. When it created a little spinning top candle at the bottom of this move, and then wicked above and closed below the previous 2 candles. So this day right here closed below both that candle and that candle. Which when you do that, that's like a super engulfing bearish candle, right? For me that sealed the deal that this is probably going to capitulate, because this was its last chance to get above the master origin line. Am I connecting all these? So we have 4 events of price interacting with the master origin line. The first 2 events, so 2015-ish, 2014, and then early 2019, late 2018, it capitulated to this line. The next 2 events capitulated at, or well, assuming this is capitulation, in March 2020, it capitulated at the line, right? Instead of capitulating down to it. So this is another reason how I'm seeing this as the number 1 most likely. So let me take off the master origin line here. And I'll take off the weekly 10, and I'll put back on this macro range. Oh, no, wrong macro. So this macro range has been broken out of. This is the macro tilted range. And that's another analysis. Like, it broke out of this channel, it's going to make another range lower. Like, that's just how ranges work. It's possible it comes right back up to it, but it's probably not going to. Anyway, that's a different type of analysis. Okay. So that's why I think that it's slightly more likely to bust on through this as opposed to getting a strong bounce up to the 38.1. Let's see, where is that? 38.3, the 38.3 level. But so contrary to that analysis, though, so we have two competing, two strong ideas that are in contrast to each other. Let me go to the top right here. Yes. So you can see the bottom left of this chart. However, you do have the idea what I said earlier, these wicks, and it turned on a dime, very violent price action. So you see this came up and came down and turned on a dime and went straight up. That makes it so this is very strong support. It's violent wicks, and that counts as huge support. Therefore, we have two strong ideas that are in direct opposition to each other. One says this will act as support, and one says, nope, support's done, it's gone, it had its chance, there's no way, it's capitulating. And therefore, that's why I have my number 1 and 2 most probable scenarios, because of this. And so I wanted to go into this all yesterday on my YouTube video, but I looked down and I ranted a few times too much, and it was already 23 minutes long. So this is essentially a continuation yesterday of why I think that capitulation is the number 1 most likely event to happen as of now, like we're seeing it, but also why my strong number 2 is a strong number 2. They're opposites of each other. Capitulate now, don't capitulate now, right? But these are all the reasons why. Hopefully that clears that up a little bit. And there are actually other reasons, you could find other reasons why it'll bounce here or why it'll capitulate, but that's the basis of it, right? Did you see how I accidentally put on my tilted macro range and it broke down out of it? And that means it's going to create a range down lower, and it's got to do a U-shaped thing to get back in. And so there are more things that you could point as evidence to either case. However, that's the basis of it. And again, but shelf life in terms of not being scared off your butt every moment like a little mouse, trying not to get eaten, is this might have a 4 to 8 hour shelf life. Is this line at 31.2? So even though I think it's most probable that we capitulate down, that's on a weekly candle basis. So if price has not used this as resistance specifically at any point, you probably have 4 to 8 hours, of where you don't, assuming you're not a day trader, you don't really need to look at you can go have fun with family, or, don't have to check your phone at work, until this is specifically, you have lower highs, bam, 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 and you see this used as resistance, bam. Okay. All right. I thought I'd show you that trick, and I will probably wrap up my Bitcoin analysis with that, because in my yesterday's video, so if you're seeing the recording of this snippet of the live show, go ahead to my channel and look at my yesterday's video where I elaborate on other points to what I was just showing you, and I'll start looking at some Q&A now.